Hello again, fellow BeachBum traders. Welcome to part 1 of our weekly trading game plan for next week, February 21st through February 25th. And let's talk about how to win in the stock market tug of war. So we'll talk about various battles going on in the stock market and strategies for how we can win, make money, profit. Next week, February 21st through the 25th, and every day. So let's get started. So let's talk about some of the tug-of-war battles currently going on in the stock market, and then as we go through our game plan, we can devise strategies as to how we can win these various tug-of-war battles in the direction that we want to go. First is the Russian invasion of Ukraine versus Iran sanctions. We've seen oil prices, it's a battle over oil prices, and we've seen oil prices go up to 95, 96, pull back down below 90, etc. And the battle there is which one's going to happen first and pull oil prices in which direction. Obviously, a Russian invasion pulls oil and natural gas prices up due to possible decrease in supply, and then the ongoing discussion of easing of Iran sanctions is pulling oil prices down because that would increase potential supply. So we'll have to see how this battle plays out and keep a close eye on which side seems to be winning and which direction the oil prices are going. There's, again, opportunities to make money if we watch which way this battle is going. Another battle we see ongoing is the flight to safety versus Fed tapering and quantitative easing. Every time we get a risk-off, a flight to safety day, we see bond prices go up because people, particularly mutual fund managers, are rotating out of stocks and into bonds, driving bond prices up, which is counterintuitive because we know the Fed is reducing their purchasing and even talking about selling, which is pushing bond prices and therefore yields up. So we see this again, the flight to safety drives bond prices up, but in reality we know the long-term trend should be that bond prices go down. So we have to, again, keep a close eye on which side of this battle is winning if we want to try to trade bonds. Then on Friday the 18th was an option expiration date, an OPEX date. So on any OPEX date, and usually the last couple days going into an OPEX, we see this tug of war of options buyers over sellers, tugging, above, below a strike price, and we see that causes increasing volatility. So always be aware of when the option expiration date is, and where the open interest, the major open interest on stocks that you're interested in, are sitting, what strike prices, because you're always going to see this tug of war around those strike prices. We always have this tug of war in the markets of bulls versus bears. Which way are they going to pull the market? Are we going to be pulled down into a bear market? Are we going to be pulled up into a bull market? Lately I've been hypothesizing that we're in a, quote, bear market, in a declining market, so we see the bears are tugging it down, and so we want to be aware of which direction that battle is going. And then we have this ongoing tug of war, this ongoing battle in the markets of fear versus greed, and which one is driving asset prices at a given time. And there's the fear gauge we can look at, as well as they call the VIX a fear gauge. Actually, it's just a volatility gauge. But again, that's another measure of how much uncertainty, how much volatility is there in the market. So these are the current tug of war battles that we want to keep in mind in terms of our strategies for trading in the market this week and on an ongoing basis. Think about, what are the tug-of-war battles and which way are they pulling various factors of the market, and then how can you strategize to make money based on the tug-of-war battles currently going on in the market. So which side do you think is currently winning each of these tug-of-war battles in the markets? What other tug-of-war battles do you see currently going on in the markets? Let's discuss all of this in the comments under this video, in our BeachBum Trading Facebook group, for which I'll include a link in the description box below, and in the new BeachBum Trading Communities Discord server, for which you can also find a link in the description box below, and also anytime in the links section on our BeachBum Trading homepage at beachbumtrading.com, bum without the U. Again, you can find links to all of our social media accounts as well as various trading tools and resources. So again, let's talk about it. What do you think of these various tug-of-war battles? Who's winning? What else should we be looking for? Let's talk about it. Okay, let's briefly review some of the economic data from last week that played into some of these tug-of-war battles. And I'm on the economic calendar for this week on investing.com, and you can find a link to investing.com from our homepage in the link section for quick reference. So we can see on Monday, Fed President James Bullard appeared on CNBC, and you could see a comment that he made that said the Fed needed to take action now, really bad, credibility's on the line, and he was very hawkish. He's typically very hawkish, and that type of hawkish stance tends to spook the markets a little bit. That says the Fed may be raising interest rates more rapidly. They may be selling bonds, quantitative tightening. You'll hear this term starting to pop up, quantitative tightening, or QT, which is the opposite of quantitative easing, or QE. Quantitative tightening is selling bonds off the Fed's balance sheet. So again, hawkish stance. The markets don't like that. They're concerned about rate hikes more rapidly, and the selling of bonds, taking away the punch bowl, pulling out the safety net, and that tends to spook the market. So listen for other Fed officials where they're standing. I think several of the other Fed officials came out after that, and they weren't quite as hawkish, so things calmed down a little bit. Then on Tuesday, we saw the very hot January producer price index data, and we can see it was much higher than expectations, and it said, okay, inflation is still hot, and it's still going to be hot for a while. And this is the producer price index, so this is inflation in people producing products and services that then translates into consumer price inflation down the line, which is why I'm saying that inflation is going to be hot for some time to come. This is not transitory. It's not going to abate soon. And again, the market was spooked by that because, again, the Fed is in a tug-of-war battle against inflation. And so they're going to have to raise interest rates, do something to curb inflation more rapidly, probably with bigger and faster rate hikes. We also saw that crude oil stocks were down less than forecast. So again, here's this part of this tug-of-war over oil prices. The stocks were down, so there's not as much of a store, not as much supply currently available, and so that can drive prices up. Then on Wednesday, we saw retail sales was up huge, as per Jim Cramer, which that's a positive factor. That's good for the economy. Says the consumer's spending money. Says retailers have money to spend. And then everyone was waiting to hear the FOMC minutes to see if there were any surprises. There really weren't any surprises to the market. The market pretty much had priced in, was expecting what they heard from the last FOMC meeting. And but most members are supporting a fast pace of rate hikes. So we expect this pace of rate hikes to accelerate, to be quicker than originally expected, again, because the Fed's in a tug of war against inflation. So they need to do something, and do something quickly to curb inflation. Then on Thursday, we got jobless claims, and the initial jobless claims was slightly higher than expected, which is a negative. However, we saw continuing jobless claims was slightly lower than expected. So it's kind of a mixed bag there. The unemployment rate, which is the other part of the Fed's mandate, is a little bit mixed. And then on Friday, we could see housing data was not really too bad, and that was pretty much the economic data from last week. Now let's look at the calendar for next week and plan for what can we expect in these tug of war battles for next week. Okay, if we look at the economic calendar for next week, we can flip this economic calendar in investing.com to next week. And please note that all the major U.S. stock markets will be closed on Monday, February 21st, in observance of President's Day. So that gives us another day to prepare, take a break, etc. Prepare for the tug of war battles to come in this upcoming week. So if we quickly look at what kind of economic data is going to play into these tug of war battles next week and how we can prepare for them, we see some housing price data on Tuesday, and then we have manufacturing inflation data, and services. So again, these will be indicators how hot inflation is, and then that Fed versus inflation tug of war battle. We have some bond auctions, so again we may see a tug of war in the bond area based on that. We have mortgage rates, economic data. Then we have the crude oil stock. So again, in the tug of war on oil prices, that's a factor. Then on Thursday, we've got some GDP, the standard jobless claims data, so state of the economy, some new homes, again, imports, typical Thursday data. We've got some Fed officials speaking, so be aware of, is that a hawkish versus dovish stance, another tug of war battle within the FOMC, right? Hawk versus doves. And then on Friday, we've got some core PCE, again, inflation data, so more data about inflation, how hot's inflation, and again, Fed versus inflation tug of war. And then we've got more inflation, Michigan inflation expectations, consumer sentiment, how's the consumer feeling, etc. So again, please be aware of the economic data coming out, when it comes out, position appropriately, and see which way these tug of war battles are going, and position yourself so you can profit accordingly. In terms of a quick look at the earnings calendar, we're still deep in earnings season. You can see you can flip over to the earnings calendar from this page, the calendar page in investing.com. And if we look at the whole next week, again, we're going to see lots of earnings. Please be aware of who is reporting when. Are these stocks that you currently own? Be prepared for the impact on those stocks. Or is it something you're looking to buy? Do you want to buy an irrational reaction to their earnings, or look for sympathy plays when someone reports? Other stocks in the same sector are likely to react to the market, will react to them accordingly. So one of the things we saw the past week was, companies are being severely punished for anything negative in their earnings reports. So, for example, we saw what happened to Fastly and Roku, and their earnings were not bad. Their EPS may not have been bad. Their revenue they may have beat, but if they came out and gave poor guidance going forward, they got just brutally punished. And then stocks in the same sectors get punished. So Please review again, and I'll reiterate this in a few minutes. But our previous video on earnings matter again. Earnings really matter again, and not just whether they beat or meet EPS and revenue expectations, but what are they saying in terms of guidance? If you hear something like Roku said in their earnings call that they have supply chain issues and they just got punished severely. So again, review some of the other comments in that video and how to strategize based on the earnings calls, reports, etc., and the sympathy plays, how to find sympathy plays, how to profit from sympathy plays, etc. Also, please note that negative earnings tend to be followed by analyst downgrades over the next couple days. So a good example was Roku. They got punished on poor earnings, poor guidance, and it plummeted. And then the next day, a number of analysts started downgrading, cutting their price targets, etc. Well, that puts further downward pressure. So I saw a bunch of people saying, hey, should we buy the dip in Roku now? And in my opinion, the answer is no, because these downgrades are going to come out and it's going to push it down farther. So you really have to wait till all this negative sentiment abates before looking to swing them up if they have a positive future. Also, as I mentioned, look for sympathy plays. So what other stocks in that sector are likely to react the same way? If they come out negative, then these sympathy plays are likely to go down as well. If the market reacts positively, somebody beats nicely, starts running positively going up, then that may pull similar stocks up as well. So again, it's important to be aware of who's reporting earnings when, what do they say, how does the market react, and how is that going to affect stocks in the same business, industry, sector, etc. So again, you can review all of these in detail in investing.com, and or there's a quick and easy way in Webull. If you go to the market screen, and you go to the calendar tab, again, this is the online browser version of Webull. You can get 2 or more free stocks with your copy of Webull, and we're using our affiliate link included below. And again, if you flip to the calendar tab, you can see a shorter version of the more immediate earnings report. So again, please be aware who's reporting earnings, how does the market react, and what other stocks will that impact. So I hope that helps. Okay, if we take a real quick look at where the markets ended up on Friday, February 18th, I'm on the home page of FinViz. You can use our affiliate link to FinViz in the description box below and or in the link section on our BeachBumTrading.com website. We can see all the markets, all the indices finished a little red on Friday, February 18th. The NASDAQ got hit the hardest. And again, we'll see in the news that this was the part of the tug of war on the Russia-Ukraine tensions. We could see more decliners, more new lows, more stocks below. Again, supporting my hypothesis that we're in a declining market. We'll see this in the futures as well. We call it a bearish market. I'm starting to hear other people start to call this a bearish market as well. If we just quickly jump down to the bottom and look at the recent news, we can see the options volatility. Okay, so there's the OPEX tug of war. We can see the Russia-Ukraine tensions, that tug of war. We can see the impact it has on bonds, etc., stocks, decline, tensions, and then we see that tug of war. So we can see this, oil's been down, up, etc., that tug of war. Natural gas again. Similarly, we see flight to safety. Gold broke out, went all the way up to 1900. That's a flight to safety tug of war. So next, we'll look at the sectors briefly and then the futures as well. Okay, if we look at the the sector performance, recent sector performance using the groups tab in FinViz, we see pretty much everything was red on Friday, but if we look at the week, we can see a couple things were positive, and that's consumer defensive and materials. So basic materials, gold, silver, copper, etc., platinum did well. So that has a little longer term positive direction. The month we see energy, obviously gold or oil, natural gas, has vastly outperformed for the month. Had a slight decline for this week. So we may see a reversal there, but the monthly trend is positive for energy, consumer defensives, materials, and slightly with finance. You see the negative is technology, communication services. This is a lot of the NASDAQ stuff, so we're seeing some of the NASDAQ downside there. And again, 3 months, so essentially this year, we see energy, basic materials, consumers defensive. So we can see a theme, right? Energy, basic materials, consumer defensive. In this declining market are the ones most likely to be positive. Technology and communication services most likely to be negative. So be aware when you're playing a stock, what sector is it playing in, where is the sector of pressure, near term, longer term. Okay, if we go to the futures tab in FinBiz, we can see again this tug of war in all the indices. They've been chopping around up and down. Again, this is just a ongoing tug of war. Which one's winning at any given time will dictate the direction, and so that's why you want to be aware. Now, if you're nimble, if you're a day trader, a very nimble trader, you can still make a lot of money in this choppy market just by pivoting up and down based on what the factors are playing at the moment. Again, if you're nimble, you can still be making a lot of money in this tug of war as it pulls up and down. And we see all the indices are in that basic tug of war, chop fest, etc. VIX the same way. As comments come out, tensions increase, the VIX pops. Then as they ease, another comment comes out and it drops. So again, money to be made. If you hear the news, you say, okay, tensions are increasing, VIX can go up. You can ride it up. Oh, tensions easing, VIX going down. Here's oil. Again, we see oil really ran up over 95 and then dropped off. So when they started talking about easing the Iran sanctions, it dropped. When the Russian imminent invasion is increasing, then it pops up. Same with natural gas, we'll see. So again, this is that tug of war, and it's very important to see which side is winning right now. Is it going to pull oil up? Which is going to pull first? Russia invading Ukraine is going to pull it up. Easing Iran sanctions is going to pull it down. And it could be a severe move, whichever one happens first. So again, if you're nimble, be prepared. There's money to be made. Same thing with natural gas. Again, it's hard to tell which direction because again the tug of war is ongoing there. Gold, flight to safety. We saw major pull up. If things ease, then we'll see the tug of war go the other way. Silver is trailing a little bit, and I think it has further upside. Gold's a little extended right now. So all of the commodities are that way. We see lumber has been running up and down as well. Then we see the bonds. And again, this is a flight to safety tug of war. Every time they say risk off, flight to safety, bond prices go up, yields go down, which again is not, I don't think it's terribly rational because we know that the Fed is going to decrease purchases and even start selling some of these bonds. We just don't know which ones and when. So again, you got the tug of war, flight to safety versus the Fed quantitative tightening going on, and it bounces up and down based on who's winning at the time. Same thing with currency. So again, we see that these tug of war battles are going on in the futures, and again, if you're nimble, if you know which side's winning at any point in time, there's money to be made, but don't get pulled off into the water, into the mud pit, if you're unaware of which side is winning at this time. Okay, let's really briefly jump back to the market screen in Webull and take a look at some of the data that's available there. And just a quick note, that right now, as of the making of this video, Weeble's offering 3 free stocks when you open and fund a new account. So if you use our affiliate link in the description box below or in the link section off of our homepage, right now you can get 3 free stocks when you open and fund an account, and you can find more information about that via that link. So if we again go back to the market screen and on the online browser version of Webull, we see the histogram, we see the decliners outweigh the advancers, but the decline, the histogram shows the rate or the magnitude of the decline is generally small. We see inflows. We see again NASDAQ is suffering more outflow than the NYSE. So again, the NASDAQ is definitely getting hit harder. Another nice thing about this market screen in Webull is the real-time news ticker here. You can see news flash up. I find that very helpful as well. We also have the earnings calendar. We looked at that. And then if we just take a very quick look at the sectors here, just see if anybody's outperforming. Again, this is as of Friday, so we can see some containers packaging, transports, textiles okay, household goods okay. If we jump back and look at ETFs, just want to see if anything is outperforming going into next week. So again, down, mostly down. Russell, all the indices down. You can also see the leveraged ETFs, to play these, and I'll talk about that again in a second. We see VIX up. Okay. Industries, again, you can see how red it was Friday. Everything was pretty much red. We see a few outperformers, mortgages. Okay, so that's housing data. Consumer defensive, so we saw that in the groups and FinViz as well. Financials a little bit. Commodities, aluminum. Okay, so there's some European banks, precious metals, gold. Yeah, we expect that. Aluminum. Total return, that's pure beta. A 25-year long-term extended duration. Okay, so long-term bonds, TLT, etc. Long-term bonds are positive. So hopefully that helps. It gives us an idea of the input data. Now let's talk more about our strategy for dealing with these tug-of-war battles going on in the market, and other ways that we can win in this tug-of-war, these tug-of-war battles, and make money. Okay, so what are some of the strategies we want to use to be able to win these stock market tug-of-war battles? And also to pick our stocks and prepare for trading in the market. Again, the market's closed on Monday, so it'll be Tuesday the 22nd. Hopefully you'll come back tomorrow and see what stocks we're updating in our watch list to prepare for trading next week using these strategies, being aware of these trends, these tug-of-war battles. Okay, we talked about earnings and how the market is punishing or rewarding stocks based on not only just their earnings reports, but also what do they say in their conference calls, what kind of guidance are they giving, what are the sympathy plays, etc. So again, I'd highly recommend you also view the video Earnings Matter again to see more detail about the strategies for how to play that and be aware of when companies are reporting earnings. Another strategy that we can use to win in these market tug-of-war battles is by using these various leveraged, ideally leveraged, I like the leveraged ones because their range and nimbleness, to long or short pretty much any of these indices, treasuries, global markets, commodities, etc. So again, if you're nimble and we know which side is winning in these tug-of-war battles, you can probably find a leveraged ETF or an ETF to play that side of the market, that side of the battle. Whoever's winning, you can long that side using an ETF. Even if it's shorting, you can long the ETF that's in shorting that side of the battle. So we've constructed a list of a number of these ETFs to play all these various sides of these battles, and we've included it in the description of a previous game plan on how to make money in a bear market. So you can find this list in the description of that previous game plan video. It's also in a featured post in our BeachBum Trading Facebook group, so you can find this same list in a featured post there. And we also now have it in a pinned posting in the ETFs channel in our new BeachBum Trading Community Discord server. So here's the link to that channel. You'll find a link to the Discord server in the description box below, as well as on the BeachBum Trading homepage. In these places, we'll probably update that list as we find other ETFs to be able to play these. And again, we talk in more detail about how you can use these ETFs, these leveraged ETFs, to play either side of these tug-of-war battles in this previous game plan. So I'd recommend that you review that game plan for more detail about how to play each of these in that list. And again, watch these lists. We'll add more to them. I'm currently looking if anybody knows of a ideally leveraged ETF to short gold. We saw how extended it was. Maybe an opportunity there. I just right at this moment don't know of an ETF to short silver or gold. So if you know of one, please put it in the comments, share it in our Discord, share it in our Facebook group. And again, I hope you'll come back tomorrow for part 2 and what stocks we're updating in our watch list for this upcoming trading week of February 21st through the 25th. And again, we hope you like this video. Please smash the like button. Please subscribe to our BeachBum Trading community if you're not already a member. Please share this with your fellow traders around the world. And please hit the bell icon so you're notified when part 2 and all of our other videos come out. Again, we hope you like this. Please let us know in the comments below how we can help you be successful in your trading, how we can help you win in the stock market tug of war battles. And good luck and have a great trading week. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below, and let us know if you found our weekly game plans helpful in the comments included below, and let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.